Indiacharts publishes Nifty daily video updates, the weekly Elliott Wave outlook, and the long short report covering all asset classes.
The good news, we've broken out of this falling channel, so ABC should be complete. A positive close at the end of the day would further confirm that. Now we've broken out and are pulling back a bit in the last 2 hours, which is fine. It should be minor waves 1 and 2, typically what you see at this point of time. Just like you did here out of this previous channel breakout, wave 1, 2, and then it should continue. So it shouldn't be anything more than that. It could be a retracement. Wave 2 retracements of smaller degree sometimes can end within 30%, and we've sort of done that much also intraday. Sometimes they can go to 50% and retest the breakout point. So that level would come in at around, what is this pointer, 17,605. So 17,600 remains the strong support area from where we should continue higher back above towards the all-time high. So we should again go back above the high that we made at 17,947. That expectation remains. And so this should be start of wave 5. Unlike what I thought earlier that this is 3, 4 and 5 is not yet. I mean, this is already started. On the daily chart, we have a slightly different structure. So I'm trying to, align with that, which would mean taking this entire sideways action as wave 4. Slightly different from what we did in the previous wave 1 and 2, which was more downwards, which fits the idea that you have a alternation between the two, and this is a little longer, which also means that this is, if not A, you would have to take the whole thing as WX5 because it's a complex correction. W was 3 waves down, X is 3 waves up, and now you have wave Y down. So wave Y is then the final leg of the fourth wave, which we probably have just completed. Now you may also want to argue 335, but this fall to me inside a channel is very much A, B, C, and so I think the WXY pattern fits better with this structure. And so we're only starting wave 5 now. That's the main change in the structure for the Nifty. Bank Nifty, I'm not able to make that change. Looks still pretty much the same. Should be 1, 2, 1, 2, or else what I can do in terms of keeping it similar, especially if we go by the daily chart, is simply take this also as WXY. So this is the other alternate. So if we take both WXY, then this is wave 1, wave 2, and then why not 3 and 4? We don't have an overlap. So again, if I really want, I can move this up here and complete the fourth wave starting from the previous low here, which is where we are sort of trying to finish the last consolidation. So I'm only trying to look at 5 waves from this bottom. The previous part of the count has its own debate, but this is 1, 2, 3, 4, and we're starting the 5th of this particular move. Now, if you look at this screen, you know to what extent the action has come back to the basic material space. So much for the reflation trade dying, but you have all these stocks, various ones moving up in various percentages across the board from different sectors. So that's sort of a pretty much across the board phenomena here on this index. Everything is 3, 4, 5, 6% up. This also reflects in the mid-cap index, which has gone back to a new high because last week when the Nifty was falling, you can see this index barely fell. It broke out of this channel and just remained up there and has continued higher. On the PSU bank index, I've made a trend line of the last 2 highs and we are very much close to breaking out of it again. So once again, we are seeing that action resume. PSE index a little slower, but still positive, and I'm still watching out for the metals index. I think looking at the way metal stocks are behaving, I do think the worst is over. I have to think in terms of the appropriate wave count on the metal index because this portion, everything is overlapping. I've marked here 1, 2, 3, 4, 5, but it's overlapping. So that doesn't make sense. Either the 4th ends here and this is the 5th or something. So on the index itself, the shorter term especially, I have to make up my mind on that. But what we will attempt to do looking at the individual stocks is start marking an impulse up from this bottom which we've made here. So this is rally maybe 1, 2, 3, 4, 5. So this is a larger 1 and 2, then another 1 and 2, and we are starting a 3. This is the outcome for the metal index, and we look at the historical setup and come back on that. The major gainers include the realty index, then pharma and the PSU banks. Among other sectors, we can actually see the sugar rally, since I've been covering the sugar stocks, resuming, because if you look at the individual names, the prices have actually moved up. The daily momentum indicator is coming into buy. Now, of course, the circuit limit for Dhampur, I'm surprised, is closed down to 5%, maybe even fell very sharply here. The limit should have reduced during this consolidation, but this has pulled back much more than Balrampur Chini, right? So Dhampur pulled back to the weekly average. I'm told that Balrampur had a buyback, which is why that didn't happen. But either case, both are now breaking out of this. This one is pulling up from the bottom, okay, and Balrampur is breaking out of the sideways consolidation. So on the daily chart, both have given a buy crossover on the daily momentum indicator here on Friday itself, and now have bumped up today, sort of breaking out of this range, going above the moving averages. Looks like a trend reversal from down to up, or from sideways to up, or whatever. In case of Balrampur, so similarly here it crossed over a couple of days ago, and now it's, I think, taking out even this previous high that was made in late July. So yes, it surpassed this entire range. Possibly this sector's rally has resumed, is what I would think. In case of Balrampur, weekly chart has not broken below the 20-week average, and you're getting a fresh rally from the 20-week average itself.